Hello, everyone, and welcome back. Let's talk about two EV companies that I've compared in the past. Yes, that's right, LEV, Lion Electric, and ProTerra, PTRA. Now, about 30 days ago, I compared these two companies and said in the short term, I would play ProTerra all day long. And I said that with confidence, and we watched that price run up where it met $7, and now it's coming back down to try and find support. We talked about $5 call options, and LEV, Lion Electric, we decided to put that on the back burner, but as a long-term play, we wanted to come back and revisit this. I believed that there was further downward pressure as the price needs to be adjusted just due to market conditions. It was too high. The valuation was too high. It didn't equal what they were generating for revenue, and production costs were coming with everything they were going to try and accomplish before the end of the year. I seen further downward pressure in that price. Now, we are at a new 52-week low, and we have global climate concerns with energy crisis, and there's all kinds of things happening in Germany, Europe, Australia, you mention it, and there could be trickle effects with this energy crisis that impact stocks globally at levels that we may not understand and leadership of these companies may not understand right now. But do you buy the fear? Do you be patient? I believe this is a patience market. Now, this is not a video that has financial advice built into it. It's sure as hell going to sound like it, though. And do you sell all of your ProTerra and go 100% down on Lion Electric? That is not the goal or outcome that you should get from this video. You should make your own individual decisions. But, of course, I'm going to have my opinion, and I'm going to express what that is in this video. Now, I'm very excited about Lion Electric. And before you just stop watching the rest of the video and you just go out and buy a ton of it, listen to everything I have to say in this video because I believe it's all important. And I don't want you to miss anything. First thing, let's cut out all the fluff and I want to get straight to the point. Manufacturing footprint, 2,500 vehicles scale per year. They have the capability of doing this already. But because of supply chain issues, part shortages that we're seeing across the board, especially key components like wiring harness, I mean, they are struggling. And a capacity plan, a full-scale capacity plan, is only as good as a complete model. And what do I mean by a complete model? You have to have people, you have to have parts, you have to have time, you have to have shifts, you have to remove all constraints, and then you've got a full-scale ability to do all of these things. I mean, these are imaginary figures. If you ask me, my personal opinion is a 20,000 annual capacity is only good if you remove all of the obstacles that are out there. So capacity means nothing without the ability to have every single part for every one of these buses or trucks. So that's the first part. I'm very excited about the growth. I think the growth is attained as soon as they can execute higher quarter over quarter revenue, and we're just not seeing that yet. We're seeing this company spend money in the second half, but some of these openings could be major catalysts. And do you take advantage of what's happening in the market right now? Is now the timing right? And you have to look at your technicals. I believe you take what you know about a company and some of these key names like Amazon. I mean, that's one that gave this valuations that were absolutely crazy. And if Amazon decides to take an equity stake in this company, that an additional equity stake in this company, that could be a major catalyst. Obviously, they are invested in a portion of this line being able to build their product. So what if they decide to take an additional equity stake in the company? I mean, that's something that could happen. I believe that these companies buy a lot later than what us retail investors try and do. So I believe we'll find the bottom faster than they'll get approval, run it up the chain, and they're completely distracted. I believe Amazon is completely distracted with healthcare companies right now, and that EV is probably not their top priority, that this is something they plan on scaling over time, and the investments that they have out there are out there right now. Now, of course, Amazon's huge. They've got multiple teams. They can do more than one thing at once, but a major news development, I would put that on the lower list, but it's totally possible. So besides manufacturing footprint, let's scroll down here and see the vehicle lineup next year. A lot of these are probably potentially going to get pushed. And while the company focuses on their current order book, which is plenty to increase revenue, because really that's what you want to see. You want to see an ecosystem of what they plan or what they're capable of doing with these fleet operations, and that they've got everything within this ecosystem that they need to be able to knock it out of the park. And it looks like they've got all the key existing components, and they're there. It's just a matter of removing a lot of these obstacles that they've had in the past and being able to scale and not be afraid to give analysts guidance. That's another thing. During the earnings call that they had back on August 5th, they were not willing to say too much besides, we believe that the supply chain improvements have had some kind of turnaround to where we believe we'll see incremental growth in Q3, Q4. I wouldn't quote me completely on that. That's the sense that I got out of the last earnings call, that there was going to be some kind of improvement. But what they wanted to make very clear is that they were not going to give guidance, but they wanted to also say that they had sustained supply chain improvement. So I believe they have enough visibility into Q3 and Q4 to know exactly where their supply chain currently exists, to be able to see that incremental growth through the rest of this year. Now, what's really important besides the growth is their ability to be able to not only complete the manufacturing and the facilities, but to prioritize exactly what they have in storage and what they plan on building, because they have this huge picture of wanting to do everything. They're starting to scale that back so they can reduce their cost, their CapEx, and not try to have a huge liquidity issue in the company. So you can see in the slides that they do have the second half of the year that's painted out here on how much cost they're still going to have in the second half. So we're still running into cost pressures. So that is it's good that they've cut down on the cost. They've reduced their CapEx spend plan. So that's another very positive thing. They've got the battery plant, they've got the new facility, and all of these catalysts are supposed to be up and running before the end of the year. That means you don't want to miss out on these catalysts in Q3, Q4. So September, or the end of this month, is going to be a great time to DCA, dollar cost average. We're going to take a look at the charts, but the total addressable market means nothing to me. I don't care if you put 200 billion here, if you put 50 billion here, it doesn't matter. The total addressable market, it's about you being able to build a bus. You need to be able to build a bus from start to finish with the people, the time, and the resources, the parts, and without obstacles, and with great quality. So we've got strong ability to be able to spend as governments in the United States and Canada at a federal level, at the state level, provincial level. There is enough money that I don't need a slide to tell you that. You and I know this. There should be a comfort with understanding that the customer demand to transform from diesel, gas, electric over to electric is going to be strong. So, this is where people are not afraid to put their money, or you shouldn't be afraid to put your money, but put it in, collect profits, get out, or find the right timing. If you got in way too early, then Proterra, look at Lion Electric. And Lion Electric, I would look at Proterra for those entry points. And Proterra might be a little less exciting right now, but I tell you what, Lion Electric is looking very exciting. And this is one that I definitely want on your watch list. Now, the order book, we've got about 600 million. And I believe Proterra's got over $1 billion, but it's all about alleviating those supply chain issues. Now, how do you do that? How do you increase your ability to be able to build more, especially as you're comfortable enough in Q3, Q4 to build that capacity? Why would you not put capacity on hold? So I believe with Proterra, it's just a matter of starting the shifts. I think they have the space, they just need the parts. Well, it sounds like LEV or Lion Electric is prepared with alternate suppliers and new suppliers, that they've built a foundation of a new 50%. They're saying 50% increase in new suppliers and alternate suppliers. That's a massive number. And that's a big statement to make, and the comfort level that they have and their supply chain improvements in the second half. Now, do I trust the leadership and their visibility, their modeling, that they have the foresight to understand these macroeconomic factors, that they have clearly missed the target, and you wouldn't commit to all of these things, and now you're changing your plan, you're modifying your plan, and you see that the share price is reflecting that. So Can you completely trust the leadership team, or does it help for you to do your own due diligence and look at these macroeconomic factors? I think we got to talk about that. Now, another thing that is definitely putting pressure on the price is going to be the liquidity update. So right here at the market, equity program established in late Q2, 125 million is putting pressure on the price. There's no question that this is being priced in as if it's happened already and they haven't issued a single additional share. So it is putting pressure on the price. That's why I'm saying if you DCA, when this is announced, hopefully it's announced at a much higher share price, maybe after a pretty big announcement in Q3, Q4, we'll have to take a look and make sure you understand when this expires and when they plan to do this. They might take advantage of a lot of these in sequential order, the way they have them listed here. Maybe this one comes last. It's on the slide last. It's something to think about, but just know, as soon as you buy an equity stake, this is something I don't believe they're going to take off the table. To fund growth, they're going to have to use equity. I believe they're going to have to use equity, and as the price drops, it can quickly come back up to the levels that it was before, but those drops could be great buying opportunities if you have faith and trust in what the company's trying to do, and you understand that these liquidity issues are temporary issues as long as they can correct it through revenue and growth. And I believe that they can. So let's take a look at where the price stands right now. Right now we're at 402, and I believe this was down at 399, 398. I believe it dipped down into this area. I like to put it on the day chart first because the last time that this was under the 30 on the RSI and it went as far down as 23.23, this was under 24. Just remember this was under 24 before it responded. This could come down this week. It depends on how the market responds to these global economic concerns and the Fed increasing rates. I mean, obviously, we've got a CPI problem, and it was higher in Europe than it was in the US. And even though we have signs of it coming down, it's still elevated. And the Fed has warned that he may come in with unusually high rate hike in this next meeting. There is the potential that it is not a 0.75% increase. So with that volatility that we're still facing in the market, we can see we topped out up here at $5.66 and came down here to try and find support right under $4, but it never went under the 30 on the RSI. So in the daily chart, I would like to see this go under the 30 on the RSI. So I believe we still have time. I could be wrong. This could be a great opportunity to start DCAing. But if I had 100% of my allocated spend, a portion of my total allocated spend, I would probably do 20 out of 80% here. I believe that we're at the bottom, but not the very bottom. I mean, it's just too concerning what's happening in the market. And with September 20th to 21st approaching in just a few weeks, I would say be patient with your money, especially on the backdrop with this Europe's energy crisis that's threatening glass production. And look what it says right here. Car makers, the price to sales trailing 12 months is at 8.79%. If we go into the financials and we look at the revenues for the last few quarters, these are in quarterly buckets for LEV, you can see that it has been improved. It's improved quarter over quarter somewhat. I mean, pretty sustained with a couple of little choppiness, but it just depends what you get finished in that quarter. I mean, it is improving, but 30 million, I mean, that's kind of weak. Now, what is strong and what we're really expecting once they get ramped up, once you're able to do a lot of numbers, you can get very good gross margins. And imagine if they can get back to a 27.3 gross margin or even a 9 or 5%, because let's take a look at ProTerra. And I know those of you that are watching this expecting us to talk about ProTerra, here you go. This is your little nugget right here. What is the top in the last few quarters that we've ever gotten with ProTerra on a gross margin? We've barely broken 4.3%, and this is just extremely disappointing. But on the revenue side, they're absolutely killing it, and it's looking sustained and very strong. And with battery production, and they have a battery facility opening up, that is definitely a catalyst that I see could move the stock. Now, ProTerra is on a pullback right now. I mentioned that in August 14th. This was the day before. This was on a Sunday. It was 2 o'clock in the morning, and I was like, hey, big update. I know that the Patreon members, they're real big ProTerra fans. If you've got a cost average, I just want to let you know, we talked about call options, the $5 call options when we were talking about this back here at the $4 range. If you had the opportunity to sell this at $7, and what did it do? If we look at the charts, and I included a chart on here, that's really important for you to know too. Right here was the screenshot, and I just want to make sure that everybody got this 55% gain that we're about to look at. You can see we were at about 705 right there. We topped out, and you could see it was elevated up here on the RSI. And what I did, I think it might have been in the 30-minute chart, and I said, look, if you can take it off the table, especially those call options, because it's all about buying low, selling high, and here it is right here. Let's be moderate and say you got under this area right there. That was about a 50% gain. I mean, right here is where you get signaled off, right? And then you just wait for it to revisit, confirm, starts its uptrend, economic conditions change, Fed will pull back on these interest rates at some point, which will allow Q3, Q4 to be a little bit better. That's what we're hoping. But that's pretty much what I wanted to tell you. So Lion Electric, let's take a look at their inventory, because this is really important too, to keep up with these inventory balances. 151 million, right? And look at the increase of inventory on how it's steadily increased, how they are planning and preparing to get through Q3, Q4. This is LEV. This is Lion Electric. Now, cash flow statement, look, net income for LEV, right? I mean, not in a bad direction, but do we have cash on the books? $83 million. That's not going to get us to where we need to be. And you can see that that cash is dwindling down. Now, of course, ProTerra, great balance sheet, not bad at all. Not amazing up here. I meant 52 million, and they're definitely not profitable by any means. This isn't even expected till potentially 2023 at the earliest. But with all these cost increases, you just never know where it's going to send. All right, that's pretty much all I have. If I missed anything, let me know in the comments below. Where should you add? I think you have to wait and watch, but at this level, breaking the 52-week low of Lion Electric, the link to the Patreon, if you want to get these notifications as soon as they come out, you can find that in the comments below. Buy low, sell high. Now we are transitioning over, and who has this at 250 and for what reason? Does it just have to do with the price to sales trailing 12 months being an 8.79, and people are very upset that maybe the income statement wasn't more, that we're only at 30 million. I mean, that this is not a number, and the business will not give guidance. So what are analysts supposed to do besides say, look, by looking at your financial statements, your income statement, your balance sheet, and your cash flow statement, we just can't see any justification for this. And we can't price in growth right now because of macroeconomic conditions. That's all I got. You let me know what you think in the comments below. Does this go into the $3 range? I think it's possible. Be patient, and I'll see you in the next video.